Well, we had a pretty good day yesterday, although volumes were thin due to that holiday in the UK. But it looks like that was just a brief respite, risk back on the table at this stage.
Yes, I think US GDP figures that came out were relatively weak, and people concerned about the double dip recovery and sell-off coming in quite aggressively. Dow down about 1.5% nearly, and follow through on the Japanese side this morning, where they're down nearly 3%, just over 3%. So people taking money off the table and waiting to see what is happening with this double dip recession, and whether it's time to invest or time to take money out of the market.
Of course, we had US Fed Chairman Ben Bernanke speaking last Friday, and he seemed to soothe the markets a little bit with his speech, talking about additional stimulus if necessary for that market. We also had the Bank of Japan holding an emergency meeting yesterday, not really outlining specific measures, but also saying it could take action. The market seems to be looking past that at the moment.
I think it's quite promising what both of them said. Bernanke said that they will provide stimulus if it's needed, but they're not giving a clear indication of how they're going to do that. They're going to come back and buy some bonds. That's not really what the market is looking for. They're looking for maybe more injection of cash and stimulus into the system. So initially the market saw that as quite positive. But they want more decisive action from the federal banks and the Federal Reserves around the world. So they're looking for stimulus straight away and at this moment in time.
Of course, those concerns about a double dip recession keep on raising their head. What's the market thinking at the moment? Are we headed for a double dip, or are we just headed for slower growth from here?
I think the big question there is whether they can reduce unemployment. I think if they reduce unemployment, we'll get a slow growth, but weak growth, but still on the positive side. I think if they can't start to create jobs and unemployment starts to increase, then it's going to be difficult to get out of the scenario of a double dip recession.
In the meantime, we are seeing growing M&A activity in the market, so companies obviously comfortable enough to go out there and make deals. Hewlett-Packard just the latest, and of course there's a whole string of M&A activity deals in the South African markets as well at the moment.
Yes, I think Hewlett-Packard doing a buyback of shares about $10 billion worth, so quite positive in the market. They're one of the few shares that were up yesterday on the Dow. Yeah, it is very positive, and I think it's showing that there is value in the market. People are consolidating their positions in the market. But what is that going to do to job creation? Often when there's M&A activity, there's more job losses, and that's going to be a problem. That's going to be slightly problematic going forward. So, very positive sign that people want to invest cash and consolidate their positions for growth going forward. But are they going to create jobs going forward?
Are we seeing companies sitting with excess capital at this point? Because we've also seen, I think, a step up in dividend payments. We've seen those share buybacks, as you mentioned. And so they really are looking at utilizing some of the capital they have.
Yes, it looks like they're not using the capital for increasing growth. So what they're doing is they're rather still keeping that balance sheet towards themselves. We saw that Merrill Lynch is giving Standard Bank a bit of a problem. They're saying they've got too much cash on their books at the moment, and they'd like them to use it. But going forward, people are still a little bit conservative, and instead of going in and buying a new factory, etc., to get extra growth going forward, they're doing share buybacks and maybe a bit of M&A, and just waiting for the recovery to continue at a more aggressive pace before they start spending.
Does this tie in with the private sector credit extension numbers that were out this morning, where it looks like consumers are really driving any increase in credit demand?
Yes, I saw our numbers. Private credit extension did improve slightly off a very low base. And I think really that's where it's coming from. The consumer needs to start to take credit again, but we're relatively high indebted. From our high, I think the South African consumer was disposable income was 84%. It's come down to about 74% of disposable income now. So we're still cleaning the consumers' debt issues, but that's really where it has to come from. The consumer has to start to spend again. Once the consumer starts to spending, you'll start to see that companies themselves will start to open up as well.
Just taking a look at some results we had out this morning. Cipla Medpro, 58% increase in headline earnings per share. And that was really at the top end of the guidance they gave for a 50 to 60% improvement, so pretty good.
Yes, very good. Defensive stock coming through from the pharmaceutical side. They also had their very first dividend. It was small, but at least it was a dividend, paying 5 cents on their share. Share currently trading at about R5.80. Very good, they're growing. One of the nice things in those numbers was that their profit before financing was up 65%. And it just shows you that as they're growing, they're managing to keep their costs down, which is very promising. A very good company to look at going forward. I think they're now the fourth biggest pharmaceutical company on the in the South African market. And looking forward, if they can keep their costs down and carry on growing at this pace, something to definitely look at to put into your portfolio.
Of course, they also announced that Cipla India is going to be buying 25% of the manufacturing base here in South Africa. What does that mean for the company going forward?
But obviously it just allows them to produce at much larger volumes, gives them more capital to start producing and expanding from, I think that it's from an African point of view, so they can expand into Africa at a much faster rate.
Just finally, Visa reporting that it had record sales in South Africa over the World Cup period, and that must be good for our retail stocks.
Yes, they say that there was an increase of about 55% compared to the same period last year. Just showing you that the foreigners that did come here did spend. They're spending up to about 3.5 billion rands worth of goods, and that just shows in some of the numbers that we saw in the private credit extension, people buying televisions, etc. for the World Cup, and then people using those facilities. So very positive, and it just shows you how important tourism is to South Africa.